Hello, today is February 1st, 2025. We'll start with our disclaimer. We'll go over our calls and then make our predictions. It's my trading plan for Monday. Monday is February 3rd. Remember, my plan can change. My plan can be wrong. Trade at your own risk. Look for the pattern Friday with the early low. That's this. The pattern has an early low, a rally to a high, a midday drop, and then a late high. Well, that's the pattern. Usually it's a bullish pattern, but there's nothing requiring it to be. And when it's a bearish pattern like this, more weakness should follow. The only thing that would kill it would be gapping and taking out this high pretty much in a straight line. I don't see that happening. So we should trade lower on Monday, even if we don't close lower. Let's not forget any move, no matter how strong, needs confirmation. If we gap up and never close the gap, something else may be going on, but that's not what I think is going to happen. During the day, we did get a sell signal in the afternoon. We got the minimum immediately, but there's no reason to stop right at the minimum. This is a reminder of what we said. We thought we were in wave 4, one more decline to complete the pattern. I believe that's begun. We had a Woodson turn date, and so far he seems to have nailed it. Dale Woodson apparently has won a number of awards for his market timing prowess, and with a call like that, I think he probably deserves them. These are the patterns we should see next week, and Monday is the pattern with the early high. Well, this is a cup. That's an upsloping handle. That's an unstable pattern, and once this line breaks, the target is to undo the whole thing and go under this low, which is support. And there's also support from the January FOMC announcement price. So he dropped in a straight line to a support level. And when you drop in a straight line to a support level, either you gap under this low or the support wins. So if we're just going to continue dropping like this, you should gap under this. And frankly, when you drop like this on a Friday, almost always, you're going to follow through Monday. So we should gap down Monday under this low. And if we don't gap under it, something else may be going on. I mean, I don't know how we're going to open Monday, obviously, but if we gap up here and start rallying, I would be pulling in my horns. I don't think that's going to happen. But this really should gap under this low, and if we don't, something else should be going on. Now, as far as the wave count is concerned, we think we're still in a consolidation. I'm calling it the fourth wave. It still could be wave 2 of wave 3. Doesn't break any rules, and I can't count this consolidation as this drop as being over. If you look at the 5-minute chart, we had this A, we had this B. We should be in wave C down, and I can't count this as being over. This is the 20-minute chart. We had this what we're calling wave 3, but it could be one of 3. Here's your green A, here's your B. We don't really have to go under this low where there's good fibs. In fact, we may not, because I can't find the waves balancing out any lower price. So maybe this will hold. But in any event, I can't count this wave red C of green C as being over. There's nothing to stop a much more severe pullback here. I think that Woodson's turn date argues for that happening. This wave A was pretty extensive on the downside, green A, and wave green C usually has some kind of relationship to green A. That's not too short to be the end in terms of price, but it is too short, in my opinion, to be the end in terms of time. And of course, if we go with green C equal to green A, we're at my 58.64 level. Doesn't have to, but it's a common occurrence. Well, Monday's pattern has the early high, which doesn't tell us where we open. The market turns on Woodson's change in trend date. I think we're in a wave C down, after which we should begin a strong rally. I don't think this wave C down's over. Friday's normally bullish pattern was bearish. Unless we gap and promptly overtake the day's high, we should trade lower Monday, which doesn't tell us where we close. We've dropped to a support level in a straight line. If we're going to continue dropping unabated, we should gap under support. Without such a gap, any early decline is likely to retrace. I mean, I don't know how we're going to open. If we gap up, something's fishy. I mean, we should gap down, and if we don't have to risk money on it. We traded 85.58 points under the FOMC announcement price, and there's a three-leg whipsaw. It should take us more than 85.58 points under that price, meaning we should print under 59.49.75 cash before this pullback ends. Doesn't mean we drop Monday, even though I think we should get follow through. So we have close to 100 handles lower in front of us. Not quite. And that doesn't mean we stop here. That's just the minimum target. Usually we go lower than that. So it's the pattern on Monday with the early high. I think we've started the long-expected wave C down. It happened right at Woodson's turn date. I tip my hat to him. He's a pretty smart guy. Odds strongly favor gapping under this low. We'll have to keep our antenna up for something else going on if we gap up instead. And that's today's call.